You're probably here to find out why I've just bought 17% of JetAI. In this video, I'll go over why JetAI is currently trading for less than 20% of its book value and how it's gearing up to become a serious player in the AI and high-performance computing space. So, JetAI initially started as a private aviation business. It sold private jet flights from point A to B, jet cards, which are a way for a client to buy flight hours in advance and use them as he wants on call. And they also managed aircraft for owners. All of this generated them around $11 million per year in revenue at roughly break even. It also launched a suite of software for the private aviation space. These include Charter GPT, a B2C platform that allows users to book flights for an AI chat system. It also white labels this platform to other brokers as a live agent called Ava. It also created a B2B marketplace called Reroute AI, which helps private jet operators sell empty legs and plan their flight schedules. All of this software business together brought in roughly $1 million per year in revenue. And however, it's still very early in this state in its state. None of that is really that much relevant to this investment because in 2025, JetAI has agreed to sell its traditional private jet business to Fly Exclusive. FlyX is a larger operator of private jets who does all of those services, but at a larger scale and actually owns airplanes and has a market cap of roughly $400 million and is trading under the ticker FlyX. Now, the deal with JetAI provides for the acquisition of its traditional private aviation business, meaning it retains its software business, and values the traditional private aviation business at roughly $12 million, purchasing it at a 15 to 20% premium, depending on parameters on the closing date. This puts the deal size for JetAI at roughly $15 million. The acquisition will be paid to JetAI shareholders entirely in FlyX stock, and it's expected to close in the first quarter of 2026. Now, given the recent SEC filing that shows JetAI has 15.5 million shares outstanding after using its ATM facility, that means that fully diluted, that acquisition price averages out to about $1 per share in FlyX stock for JetAI shareholders for its private aviation business. Now, with the stock currently trading at 50 cents per share, a solid 100% return seems interesting. However, that is not the reason I've purchased 17% of this company. You see, JetAI is disposing of its private jet business while retaining its software business as a bonus to go into building and operating data centers for AI and high performance computing. It sounds crazy until you actually see what they've already accomplished to do this. To cut to the chase, the most important part is JetAI management have raised a separate SPAC vehicle, which is a fancy name for a blank check company, called AI Infrastructure Acquisition Corp. It trades on the New York Stock Exchange for the past month at par value, and it has raised $160 million to its balance sheet, which are just sitting there in cash, earmarked for investments in data centers, in AI and high performance computing, data centers that JetAI will, of course, operate. And JetAI directors and management are also directors of this SPAC. Now, as part of raising this SPAC, JetAI was the SPAC's sponsor, which means it received 12.5% of the SPAC's outstanding shares in return for a $3.6 million investment. This means that JetAI has received equity worth $20 million in this publicly traded SPAC, which has $160 million on its balance sheet, times 12.5%, that's $20 million, in return for just a $3.6 million investment from the business. That is a 5.5x return on its investment in the SPAC. And a key benefit of this is, of course, JetAI management's control of $160 million worth of funds earmarked for investments in AI and HPC facilities at the same time as JetAI is going to be looking for funding to scale out those businesses and data centers when they find hyperscale tenants. Now, given a 15.5 million share count, which we know is accurate as per the company's SEC filings, this gives a $1.30 per share value to the SPAC stake for JetAI shareholders. And that is on top of the dollar per share in FlyX stock that JetAI shareholders will receive upon the closing of the sale of its private aviation business. So it gives a book value already of roughly $2.3 per share plus its software business. This would already be enough to justify my investment here, given the current trading price of roughly 50 cents per share, but there is even more. JetAI has already signed 2 joint ventures to build and operate AI and HPC data centers. The first is a joint venture with Consensus Core Technologies, which is a Canadian data center builder and operator. JetAI will receive a 20% stake in Consensus's Maritime Canada facility, which has already 40 megawatts of power and the capacity to build out up to a gigawatt, and its Midwestern project, which has the capacity to build out 100 megawatt. Now, to put things into perspective, 100 megawatt is worth to hyperscalers roughly $100 million in income, in revenue. That's more or less the market rate. But if you look at deals that Irene or Cypher have done in this exact space over the past 12 months. Now, JetAI will receive those 20% stakes for the consideration of putting up $8 million for the development of those projects. And then once a hyperscaler is located, and there is actually a tenant that is willing to pay revenue once these capacities are delivered to him, they will put up an additional $12 million for the build out of those projects. Or if it is decided to self-fund this project while looking for a tenant, in which case, obviously, they have the SPAC to fund the development of those data centers, which already has a $160 million raised. JetAI has also signed another joint venture with a landowner in Nevada, where the landowner will get a 30% stake and JetAI will get a 70% stake in exchange for an investment of up to $10 million, similarly to the Canadian one, based on milestones on them actually getting feasibility studies done, permits, energy access, and all of that, and eventually building out the site through project financing debt. Now, management estimates that the value of that stake once all permits are obtained for this facility, and it is actually started for project financing. This will give an equity valuation of JetAI's stake of roughly $35 million. And the forecast that they gave was once that data center will be paid off through revenue from hyperscalers, it will be worth roughly 100 million. That's the forecast that they give, at least for those joint ventures. And obviously, the Canadian one would be at a higher prospective valuation than the one in Nevada. Now, that is based of them just looking for deals and doing joint ventures for 1 quarter. So obviously, we see the level of execution here that they have been able to raise $160 million for a SPAC, that they've been able to sign 2 joint ventures, locate the sites that are close to infrastructure and cities for quick access, and deliver on this very quickly. Now, even if you apply a 50% discount to management's outlook to the value of these joint venture projects in their current permit level stages, that gives you roughly a value of $1 to $1.50 per share. That's even if you discount them by half and you take them only in the current state. So if you combine all of those three aspects we discussed, this brings you to a conservative valuation of JetAI today of roughly $3 to $3.5 per share, whereas the stock is currently trading at 50 cents. And this is why I purchased 17% of the outstanding shares. This will actually be the first time I'll have to file a 13D since I'm above the threshold, um, which I will do in the next 10 days. So how is it possible that um, such a misvaluation happened? There's actually a few key reasons that explain this. So on the private aviation side, the deal with FlyX says that to close, JetAI Aviation needs to have $12 million in net cash. Only net cash refers to what the terms of the deal, not cash and cash equivalents in the balance sheet, which is what many wrongfully assumed. Because if you look at only cash, the cash position of JetAI is roughly $5 million at the moment. However, they also have $4 million in deposits to Textron Aviation, as well as prepaid flights on jet cards, and which all of which are expressively named in the merger documents with FlyX as also being part of net cash. Now, if you combine all of them together, you're actually incredibly close to the $12 million figure, even before the $4 million extra that they have raised as part of the ATM sales earlier this quarter, which will likely go towards the AI HPC investments. So many just assume that they would need to dilute and raise an extra $8 million to get to the 12 million threshold and close the deal, whereas they were actually already at the threshold. So that's why it's not trading at the $1 in FlyX equity that the company will get once the deal closes shortly. Now, on the SPAC equity piece, which is worth another $1.30 per share to JetAI shareholders, many incorrectly assumed that JetAI had diluted shareholders to raise $20 million to make that investment, whereas JetAI only invested $3.6 million in the SPAC, and it has just increased 5.5 times since they were the SPAC sponsor and got heavily discounted equity. And this part hasn't been stressed by JetAI yet since they haven't had an earnings report since. And you can't actually find that information unless you go for SEC filings, which the vast majority of people don't. So they just assume that they had diluted heavily to get that $20 million and invested. They don't no one understood that they actually made $1 per share in equity on that investment already, and so this hasn't been priced in absolutely. Now, finally, on the AI HPC deals, um, many similarly haven't gone through the actual deal terms and investment decks, which heavily stress that first, JetAI makes small investments and has its equity grow as the project receives clearances, electricity access, and other types of permits. And only then, when a hyperscaler tenant is actually found, it will start to invest the remainder, the bulk of their investment. So the dilution has been heavily misunderstood here. It's actually accretive deals. It's increased book value, whereas everyone had wrongfully assumed that there would be millions and millions more shares that simply don't exist. Yeah, and by the way, the private the follow-on public offering that JetAI was going to do was at $2 per share because um, sort of the book value you get at a minimum without taking into account the joint ventures, which are essentially startups at the moment, is roughly 2.3, $2.4 per share. So they had a slight discount to the book value when they were going to raise at a $2 price per share, but they canceled it obviously since the stock is currently trading at roughly 50 cents. But that is the same estimate as more or less the company has of their equity valuation. So all of these misconceptions combined kind of allowed for this opportunity to happen, which I immediately took. So if there are only a few things to remember from this video and this thesis, the first one is that JetAI is about to close an already signed acquisition of its private aviation business at a $15 million valuation, which will deliver just under $1 per share in FlyX shares to JetAI shareholders and leave JetAI with its aviation software business, which I haven't accounted in this valuation, but is probably worth something. Then JetAI has just received a $20 million equity stake in a SPAC that it runs in exchange for a $3.6 million investment in cash, so a 5.5x return. And this is worth roughly $1.30 per share in value on top of the dollar per share of its private aviation business to shareholders, plus the extreme benefit of being able to control $160 million to invest into the data centers that JetAI will do and the deals that they will do there. Without the need to raise dilutive funding, they will just be able to access that line without even using banks in full and get that equity line. And finally, JetAI has three joint venture data center projects already that it can safely fund using this SPAC that are structured and funding and valued at which management values, even if you discount by half what the outlook that they give, at another $1 to $1.50 per share. So this is how I end up with what I believe should be the stock price really for JetAI in its current state without them executing further on this AI HPC thesis. But where it is now, the fair value should be roughly $3 per share in my mind. And this is why I've acquired near 17% of the company so far at roughly 42 cents per share. And obviously, if the opportunity presents itself for some reason for me to increase my share, I plan on doing that. And thanks for listening, everyone.